I want to bring in now Eddie Ghabour. He is managing partner at Key Advisors Group, also author of Common Sense Bull. Eddie, good to have you here on the show. Look, for the first time in nearly 3 years, yesterday we had the Dow, the S&P 500, and the Russell 2000 small cap index all close at record highs. What does that tell you about the strength of this market rally and the breadth of this market rally?
Look, this is one of the most resilient markets probably in history. When you take a look at the obstacles ahead of us here in the near term with the spikes in the virus. But look, I think the bottom line is what this market is telling us and the signals that it's telling us is the market is forward looking and looking out to the next 6 to 12 months. The backdrop is extremely bullish, especially with this vaccine news. This vaccine news and how effective this vaccine is tested is a game changer. It really is. And I think people are now starting to see the light at the end of the tunnel, that hopefully this third wave we're going through right now will be the last of it. And everything moving forward, starting next year, should start heading into a positive territory. So we are extremely bullish going into the next 12 months in regards to equities due to the backdrop that we have heading in to the new year.
Well, let me throw in a crux here, which is stimulus. Does the fact that we might have a vaccine ready to be distributed a little sooner than maybe we thought mean that the government doesn't give us the stimulus or as big a stimulus package as we were hoping for?
Well, I think with a split government, the market has already priced the fact in that the stimulus bill is not going to be nearly as big as initially thought out to be. So we are going to get a smaller stimulus in our opinion. But again, I think having the vaccine is a good thing. So that far outweighs needing a massive stimulus bill. We do need stimulus, make no mistake about it. And I wish our politicians would move sooner on a targeted stimulus plan because states are starting to shut down again to a certain degree. My state just announced further shutdowns today. And so stimulus is definitely needed. So that is a near-term risk and will cause some volatility. But again, I think dips are to be bought right here, is my opinion, if you have the right risk tolerance.
All right. What state are you in, by the way, Eddie?
I'm in Delaware.
Okay. Yeah. Yeah. No, we're seeing different pockets of the country going into these new restrictions, and we have to think about what kind of impact that's going to have on the economy. So as you look at that backdrop, where are the opportunities when you say buy on the dip? You know, where do you see those opportunities for investors with this kind of a backdrop, with more and more local communities going into lockdown?
Well, we have been advocating a barbell approach of rotating out of some of your technology companies that really were the big winners this year and actually going into the value sector. You know, the value index is still down for the most part. There's lots of areas that we feel like are going to do the best next year, as we call them, the recovery plays. You know, so you can look at your value stocks that have really underperformed growth for a long period of time. And we feel like that's going to be the real winner heading into 2021.
All right, we are going to have to leave it there. Eddie Ghabour, thanks so much for joining us.
Thank you.